FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And as we continue our series on Forex daily market maker setup, guys, we're going to go ahead and talk and cover a couple of different setups from this past week. The reason we didn't do it on, I believe on, what was it, Thursday or Friday, is because we didn't have a lot of setups that we actually traded. So I wanted to wait till the whole week is over so I can actually give you a good enough video for you to actually watch. All right, so let's go ahead and get this started, guys. Let's take a look at some of the trades that were taken on Wednesday, Thursday, and Friday, so we can recap this entire week. All right. So first, let's go ahead and start on Euro JPY. So a couple things that I want to mention first on Euro JPY is on Friday. Take a look what happened on Friday here. A lot of times, guys, you're going to see stuff like this. And what I'm talking about is this right here. You see this? This is not an example of an M that we want to be able to trade. Okay? The M's that we want to take are not like this. Meaning like the entire middle part doesn't come all the way down like that. Okay, the M's that we're trying to trade are like this. All right, so keep that in mind. So if you see stuff like this, right here, where it's just the entire middle section is actually bigger than the legs, than the first leg itself, that's not what we're trying to trade. All right, a real simple reason why not is because these candles here that you see, like this one here, are too big, and it makes it impossible for you to get a really good actual entry if you're waiting for your confirmations for your entry that we look for. Okay, if you want to go over the entries and exits again, there's a video. All the videos that we have on that are in our playlist of trading with market makers, so go check it out. It has literally everything that you need to know about the strategy. But this right here, I wanted to show you guys this because this is not what we're trading, guys. All right, so I know a lot of guys try to trade this as an M. This is not an M, so avoid this if you see this. Okay, that's not what we're trying to do. All right, so let's take a look at the actual trades that were taken on Euro JPY for Wednesday, Thursday on this pair. So let's go ahead and start off obviously with Thursday here. Thursday, we had a good setup that essentially happened, two of them that happened on Thursday back to back from each other. So it really just depends on when you were actually looking at the charts. I know that I had traders that took it either both directions or just one. So the first one is taken from the London session, W type 2 setup, taking it to the 200, and then the entry was right here after this candle had finished. This candle basically closes above the 13, and it's an entry taken on this particular trade. Now, as you can see, this basically gives you 27 pips if you go right in after that, the end of that candle. Almost a 2-to-1 risk reward ratio. You're still within 15 pips as your stop loss. All right, second trade was literally right after that, during the US session. And I know some traders, basically most of all traders, took it on this candle here. So I get asked this question a lot, and essentially is, what do you do when the candle's so big like this that you have to go outside of, let's say, your normal 15 pips, right? So let's say in this example here, you see what's happening. You're very confident. You see you got a railroad track here. The railroad track is not at the right time, so you can't take the trade right here because that's not the right time. It's in the middle here, right? So we wait for the US session to open. As soon as we get the US session to open, you get this strong candle there to open. Now, if you take this trade here, all right, where does the stop go on this? So the stop essentially would go above the 200 because you basically want a barrier. And the reason that you want a barrier is for exactly what happens 3 candles later when they come back up and they touch that 200. Okay, you see how they wick the 200 again here? That's why you want to go above the 200. Because here what they'll do is they'll actually extend up the spread, you know, right above it here to get as many possible people in a buy. So very important that if you're going to take trades like this where you have to take more risk as far as your stop loss goes, then you need to lower your risk on your lot size. So if you're normally trading a 1.0 as your lot size, let's just say, then if you're taking a higher risk on more stoppage of your stop loss, then maybe you should take only half a position and do a 0.50 instead. That way you're taking more risk on the stop loss, but you're lowering your lot size to basically accommodate for that. But this trade, as you can see, dropped the rest of essentially the US session. So this trade, 30 pip trade, you did have to risk more, but if you knew where you are in the cycle, if you take a look, you've been dropping now for what, 2.5 days. You already know what's going on in the weekly cycle. You're in a trending cycle, right? So you're just going to keep dropping. So that's basically why you're selling this, because you're in a trending cycle. But 2 setups on Thursday on Euro JPY. All right, guys, so let's go ahead and talk about Euro CAD. So Euro CAD on Thursday, very similar to Euro JPY, basically gave out 2 trades. All right, so the first trade, if you don't see it here, you basically get a cord of wood, and you, a lot of times you don't get that at all. You don't see this very often, but when you do, it's right here. You get a couple. You see, you have a couple things, right? When you look at this trade setup, number one, you got a pattern, which is a cord of wood. 2, you have it pinning basically to the 50. 3, it's basically riding on the middle, in the middle of the range. Basically, it came from the bottom, and then it just basically got stuck here, creating this cord of wood here in the middle of the range. Okay, so you have all those factors, and then another factor, the biggest one, you have the pattern, the timing, it's in the right timing, and the cycle. So if you look at the cycle for that week, what are you doing for that cycle? Right? So for that cycle, you're in a trending cycle, right? So you're trending up, so you know you're looking for buys. Okay, so if you're looking for buys, you're in a trending cycle, you have cord of wood pinning to the 50, pinning to the middle of the range. I mean, all of the things are there. You have so much evidence that's there for you to take a trade. Also, you're, as you can see here, you're above, basically now you're trading above previous week's high. So you definitely know you're in a trend. Now, if you need any more evidence, I mean, obviously the 800 here is the 50 EMA on a 4-hour chart. So you know that's basically going in an uptrend still. So everything is basically telling you to go ahead, and this is a buy. This would be a buy going along type of setup. So what does this setup look like essentially? Well, if it's a cord of wood like this, you're essentially putting your stop loss below the cord of wood, right? So in this case, it'd be about a 23 pip stop, and then essentially to make it a 2-to-1, you're going to the previous day's high. All right, so this is basically 47 pips. Again, if you're taking a higher risk, okay, on the stop loss, lower your risk on the lot size. It just makes sense. All right, and then You can take this trade up 47 pips. You're done once you get here. If you want to, you can keep going with it and keep going higher, obviously. But I mean, honestly, 47 pips straight up, one trade, not a bad deal. All right. Second trade, pretty much you got a reversal that happened at the opening of the US session. You can see the first leg here, second leg is inside of the box. So there's your M formation there. The timing is correct. Now, as far as the cycle goes, you know where you are in the cycle, right? So you know that this is a trending cycle going up. So this trade basically is a very short trade. You know that because you just took a trade going long on it. All right. So where's your target on this? Basically, your target is the 50. That's all it is, the 50. It's always the 50. If you have the 50 in your favor where you can take it as a take profit, you always just go to the 50. Call it a day. All right, so let's take a look at Euro NZD on Friday. Now, Euro NZD on Friday gave us one trade that was basically a W pattern during the London session. Type 2 setup. Essentially, you can see first leg right here. And then the second leg actually doesn't even come back down all the way. So you could see here's the first leg here, and then here's the second leg, and then came up. Now, very important that I want you to see this right here. This W like this basically lets you know what market makers are doing. They're not coming back down here because they already have what they need, which is basically traders trapped going short. So there's no need for them to come back for you. Okay. So this particular trade goes all the way up, 93 pips just in the London session alone. So well over, your 30 pips that you would need for this particular trade. Now, one caveat to trading NZD pairs is, just like we talked about on the other ones, you're going to have a much bigger stop loss because it's an NZD pair. Not all pips are created equal. So this candle right here, this entry candle, which is right here, is by itself about 40 pips. So you have to understand that taking or trading any pairs that have NZD or AUD in it are going to come with that. So if that's the case, again, same thing, because you're taking a higher risk on the stop loss, you have to lower your risk on the lot size. But you can see also on the TDI here, we were all the way down at the very bottom, right at the 31 line here, and we came right back up, and you can see we were already crossing. So you have all of that. Not to mention, if you look at the cycle that you're in that week, if you look, what kind of a cycle are you in that week? Okay, you're in a level making cycle that week. You're in an accumulation level that week. Basically, you're doing nothing but moving sideways between what? Support and resistance, right? You're doing nothing but this, creating a level that week. All right, so if you know what kind of a cycle it is, right, you already know you're at the bottom of it. So you're going to be buying back up to it. Every time it's hit this bottom, what's happened? You buy. Every time it's hit the bottom, you buy. Every time it's hit the bottom, you buy. It's happened over and over and over again the whole week. So why would it change? So that was the setup on Friday. And then you can obviously see the next setup here on Thursday. Very similar thing. Same story where you basically are moving down, and they build out this entire thing, the whole London session. The first leg here, come up, then back down for the second leg, type 2 setup, and then just take right off. Okay, now on this particular trade setup, you had a really a very good entry and not that much on the stop loss because the candle was so close, the 13, and I mean this all the way went up for about 150 pips almost. So a really good trade setup on this on Thursday, And again, even on Thursday, what have you been doing the whole week? You've been doing nothing but accumulation and collecting contracts for a bigger move. So you've been level building that entire week. Okay, you can see on the TDI as well, you had a W form right here. Boom. And you had it form, look, you had it form very early. Okay, so by the time that this was here, by the time that the second leg here, you were already up here. So you already had divergence essentially already happening as well, because you were still trading down and this was actually going up. So you had divergence there as well. So you had all these different things coming together, and that is the type of trades that you're looking for. The trades that basically give you as much evidence as possible. So if you're trading, if your pairs are pound USD and pound NZD and Euro NZD, out of those three pairs, which pairs are giving you the pattern, the timing, where are you, do you know where you are in the cycle, and then what other evidence, supporting evidence, can you put together to give yourself the best possible trade setup? And you know what, sometimes there may not be a trade setup that day. And that's perfectly fine. That's perfectly fine. It's not a big deal. All right? But that was a trade setup on Wednesday. Interestingly enough, I'm sorry, that was on Thursday. That was a setup on Thursday. On Wednesday, you ended up getting something we don't see very often anymore. I don't see these too often anymore. This was basically what we like to call a trade from the edge. And if you don't know what I'm talking about, essentially, go look. If you look in the Trading with Market Makers playlist, there's a video called Trading on the Edge. And it basically explains what this is. But essentially, it's a type 2 pattern where the first leg of it actually happens in the Asian range, in the Asian session, and the second leg happens basically right inside of the London box. And I mean literally right inside, as you can see here. So the first leg is here, comes back down, here's your second leg here, and then this literally just immediately drops. So a couple clues here of what was essentially going on Wednesday is this. So if we're going back here to this time frame, okay, you have to think about what's been happening. Now, the entire week so far, Monday, Tuesday, and now Wednesday London session, you've been doing nothing but going back and forth between highs and lows. Okay. So that's one thing. So you know that you're in a accumulation cycle for that week. So what do you look for next? So next, essentially, you look for, okay, what happened the previous week? Previous week, you were in a trending cycle because you went straight up, right? So this week, it's another clue that you're in a accumulation cycle because you're going back and forth between support and resistance. Okay, so where are you that day during London? All right, you were coming off of the top or the peak so far of the week. So peak, coming off the peak of the week, coming down, accumulating, right? And then you get the setup and then you drop. But again, I don't think a lot of people would have caught this particular trade setup anyways. But I'm just pointing it out to you so you know essentially what it is. All right, so you know what it is, you know what it looks like. And again, if you want to see more examples, go to that video. It's called Trading from the Edge, and it's in the Trading with Market Makers playlist. All right, but those were the trades for Euro NZD for Wednesday, Thursday, Friday. Let's talk about gold. So on gold, I traded gold on Thursday, and essentially what we ended up getting here. So here's what I was looking for. If you guys weren't paying attention to the previous videos that I did on gold. Essentially, what I did was I was waiting. I took a sell here, trying to trade this back down, and I was telling you guys not, it's a mistake that I did really, because I should have just waited for price to get up here and see how it reacted. Okay, now I was essentially waiting for price to get up here to see if we can possibly take one more stab back down, or if we were basically going to retest this high of 1688. All right, so what we ended up doing was I ended up going back down to the 1 hour time frame, and basically as soon as it broke out of this particular structure here on this after this candle is when I got in, and I basically just traded it straight up to 1686, 1687, because I didn't want it to I wanted to get out early and make sure that that it was hit. But essentially that was my my trade that I took on gold here. Now, very interestingly enough, that this particular trade here I missed, and I wish I was paying attention to it, but essentially just a quick reversal that happened on Friday. This was NFP, if I'm not mistaken. So I normally don't trade NFP anyway, so I wasn't paying attention to it. But either way, that was the trade on gold that I took. It was a buy going from 1659 all the way to 1686. Okay, and I took it off of the 1 hour time frame, because on the 4 hour time frame, you see you weren't getting any kind of really good, you just had big candles basically, so it wasn't really a good good actual time frame to trade it on. So the 1 hour provided that kind of time frame that I could get into the actual trade in. Now, if you look at the bigger picture on gold, this leaves us with a very interesting scenario, because what does that look like to you? It looks like a big M, right? On a 12-hour time frame. So it's going to be interesting to see on gold whether or not this level actually holds, the 1688 level holds. If it does hold, if this level does hold, I would not be surprised if we can make it all the way down to like 1540 or so. 1540 is right here where that 200 EMA is. Now, granted, I don't know if it'll make it there, and I don't think it'll make it there obviously in a day or so. I think it'll take maybe a week or two to get down there. But if this 1688 level is going to hold, essentially you're going to see price work its way down. You'll see price work its way back down again, and this is basically this will be like a reversal. Okay. Now, if that doesn't happen, I mean, you can pretty much see that the next potential stops, let's say for gold, wouldn't be hit until we get into these areas. If we start looking at the weekly charts, we're looking at 1791 and 1892. Those would be basically the next levels, essentially, that we'd be looking for gold to hit. If it breaks out of that 1688 zone, forget it. I mean, you're gonna have definitely some very strong buying momentum on gold. So keep that in mind. So two different scenarios, really, just depending on what happens. So if it breaks out of 1688, you can definitely expect it to go up very higher. If 1688 holds, you can expect it basically to come back down to that 1540 area zone. All right, guys. So those were the actual trades. I hope that you enjoyed this video as much as I enjoyed making it for you, guys. If you have any questions, this will be the last video before I make the Q&A session for tomorrow. So if you have a question, please leave it in the comments. Guys, if you like this type of content, please like and share the video. I really appreciate your support. And of course, if you need any help, guys, there is a mentoring course starting on March 30th. We only have 4 spots left. All right, guys. Thank you so much, and we will see you tomorrow.